What a day today, am I right? You would have seen a substantial jump in your portfolio value, and I think this rally has been quite broad-based. First day of the new financial year, and market gave a. There is a very famous saying that well begun is half done. We need to really wait and watch. Is that the case this time? Because if you remember, the last year the mood in the market when the beginning of FY 2024 was not very great. People did not make money in FY 2023, sorry 22, sorry 23, and hence the expectation was extremely low in FY 2024. And by the time FY 2000 concluded, I think we all know what happened to the returns. And if you look at your capital gain tax, everyone would be paying a very good amount of tax this year, purely because the market has been really very, very kind, and especially in a mid and small cap, they did extremely well. So today I also want to touch upon how do we see FY 2025, because just to get an understanding what should we expect going forward. But before I begin my webinar, just a small disclaimer that this webinar is only to enhance your understanding about the equity market. Please consult your financial advisor before buying and selling any stock. Investment in securities market are subject to market risk, and past performance is no indicator of future returns. And remember, this past performance no indicator of return of the future return also apply to the Nifty and the Sensex. So let me begin with what happened in the month of March, and then I'll come to the FY 2024, and again I'll go back to the March. What are the data points that we? If you look at March, it was a little volatile month. We have seen a very sharp corrections and upside movement in the market. There were more companies that declined as compared to advances. Like normally, if you look at it, last many months we have seen more company advancing as compared to decline, and I'll cover that in a later part of my presentation. But this was not the great month, and while the large cap did give near about 2% return, small cap came under very heavy selling pressure. And in fact, when you look at the point to point, it just shows minus 4% decline as of 31st March. That is as of Saturday, Sunday was off. So as of 28th September, because 29th was again a holiday because of Good Friday, while the mid cap was almost flat. But IT sector came under very, very heavy selling pressure, purely because of Accenture coming out with the data points, poor growth, that what we call current concerns, and that really impacted the sentiment. Next Friday, I think TCS will announce the numbers, and then we'll get a great sense of what should we expect from the IT companies. Why? Because the budget would have been finalized, and that will give an idea. But if you look at what is happening on the employee front, there is a sense of possibility that I think the outlook may not be what market is discounting at this point of time. I think there could be a positive surprise, and if that is so, while the IT has been one of the worst performing sector in the month of March, it could be the best in the month of April. That's again depending upon what kind of data points or the guidance comes out from the IT software company. This was a month where there was a little scare on the NBFC space. First, we have seen Paytm coming under RBI regulatory norms. Then we saw JM Financial, we saw IFL Finance. They've been pulled up by RBI, and that created mini panic on the NBFC. But all is well that ends well, am I right? And the NBFC sector, despite so much concerns, closed in the green. So for the month of March, they close in the green. So sometimes, we come to conclusion based on certain events, thus gives an indication that it should underperform, but the contrary, it not only close in the green but outperform. Bloomberg is aiding Indian government bonds into emerging market index, and I think that's a one positive thing that's really which will help India to reduce its cost of borrowing. Another good thing that happened last, and this has all happened because just before the election scheduled announcement, India signed a European Free Trade Association, European Free Trade Association. We have signed a trade pact. Now it is Iceland, Norway, Switzerland. So maybe now you may get watches little cheaper. Chocolates. Switzerland is very famous for chocolates, and I think we should get it little cheaper, and so forth. But now in the turn, while this has opened up the market to this European countries, to India, they can target the Indian consumer. There is a decision, there is an agreement that this country should supposed to invest $100 billion in India in the next 15 years. So this Indian market opening up comes with a commitment from these countries to basically pump in nearby 100 billion FDI in next 50 years. If you remember, India did, this is not the first one. We did with Australia also, we did with UAE also. In UK, I think we were almost on the verge of signing it, but now seems to be postponed indefinitely. And I was listening, or not listening, that's a wrong word. I was reading an interview of Piyush Goyal in Indian Express. Was it yesterday or was it today? I'm not very sure. I'm just getting forgetting. Now there he mentioned that, he did mention about the FTA with UK is getting little off. So I think a lot of hope was there, but the way the answer has been given, it gives an impression that I think it's not going to happen so soon. And at the same time, their government there, Rishi Sunak, I think that itself is on a shaky ground. So we need to wait and watch when this UK FTA fructifies. Inflation in India marginally came down. 5.09% in the month of Feb as compared to 5.1% of Jan. So there is not much of this. Today GST collection came out and it came out 1.78 lakh crores. So that's good. Both growth month on month and Y on Y. And I like that kind of a number. If you look at on the month of Feb, there was a month on month decline. Okay, and for the full year, by full year, FY 2024, net of refund, the GST grew at 13.4%, which clearly, so nominal GDP grew at 10%, GST collection grew at 13.4%. So that's a very good sign. Am I right? Why? Because growing faster than the nominal GDP. And as long as the GST growth is faster than the nominal GDP, I think one should be quite relaxed. Only thing, we need to wait and watch whether this kind of a growth can be maintained. Why? Because we are now at a really very good base. And to grow at 14-15%, I think, I'm not saying it's impossible, but a lot of efforts would be required, a lot of compliance would be required to achieve this kind of a GST collection in terms of growth I'm talking about, not the absolute value. If you remember, we have been talking about that before election, price of diesel and petrol would be announced, and that exactly what has happened. 2 rupees each on petrol and diesel, and this despite that under recovery, especially on the diesel. I have been informed there is under recovery of near about 70 paisa per litre, and yet this has been done actually. I'm not very sure this will continue. Maybe once the election gets over, maybe again, and especially when the crude oil prices are going up, I see little logical sense to decrease the price of petrol and diesel. You all know that crude has gone up by about more than 20% since beginning of 2024. Copper is high. So I don't know why this purely, it looks like more like a action that could really help the incumbent government to become more popular with the electorates. That's the only way it can be look at it. Election schedule, as we had discussed last time, that by mid of this one will be announced in the mid of March, and that has been announced. the first set of election, the first phase of election will kick in from 19th April. So exactly 18 days from now. We are not very far actually. Okay, and this is the first time it will be in the 7 phases. Okay, and the result would be announced on 4th June. We don't have to wait for the 4th June to arrive and tell us. The market will react on 3rd June itself. Why? Because the exit poll would have been out, and based on that, market is the more you get a pulse on the ground, it gives impression that it should be an easy cakewalk for the BJP to win this election. Doesn't look like any formidable challenge coming from anyone in this election, and that could going to be a very interesting whether BJP is able to, or maybe the NDA is able to cross 400 marks or not, and that would be a huge a game changer for the BJP in terms of this one. And of course, we all know that Arvind Kejriwal bail has been extended now, or not bail, the jail term has been extended, so he will remain behind the bars at least till 15th April. So 19th April is a first phase of election. I think it's completely, none of the big leader from AAP will be able to, I don't know when the Punjab is scheduled, so I will not be, because Punjab and Delhi, where AAP is very strong, so I don't know whether Punjab is going on in first phase or not, so I don't know that. The good news is again is that Moody revised upward India's GDP growth for this financial, that is FI, that, sorry, I'm now stand corrected, last financial year. Why? Because I'm on 1st April to 8%. S&P Global revised India's GDP for next financial, that is FY 2025 to 6.8% from its previous estimate of 6.4%. Why? Because of strong undercurrent in the Indian economy. And more people or agencies are revising upward India's growth numbers. Global economy, let's move from local to global. The US inflation remained more stickier than one would have imagined, 3.2% for the month of Feb as compared to 3.1% for January. As usual, Fed did not do any rate cut in its March FOMC meeting. Another is next is scheduled on 1st May. So when I come in front of you still on 1st, but 1st May to chutti hoga, because I think it's because of Labor Day. So maybe when I come on 2nd May, in front of you will have an FOMC meeting. Decision is out. Don't expect any rate cut. What Powell said to you, two important things he mentioned, and that first thing is that he said that the possibility of recession is ruled out. There is no, in fact, US economy is showing more and more strength than one would have imagined. And second thing, which was a little concern, is about the commercial real estate. And I think the problem that they have of the commercial real estate is manageable. And I would request you to go through one tweet of Nilesh Shah today of the Kotak IMC, where he talked about that 75% markdown taken in one of the real estate property in the US. Okay, 75%. So, but anyway, the Powell ruled out what you call. He basically says that there is a problem. He's not saying there is no problem. He said this problem can be managed without much of an hassle. So that's what the comfort level he has given. He also stated, like there was a Congress testimony, and there he said that there is a possibility that there will be a rate cut in 2024, but he did not give any timeline. And one more thing we must all remember, that summary of economic progress, that is called SEP, suggests that do not expect too quick rate cuts. In fact, on the contrary, the number of rate cuts in FY 2025 has been reduced, and so is the case with 2026. In other words, this time the rate cut cycle would be more shallow. Don't expect too much. The outlook for US companies in terms of growth continues to be very robust. Why? Because the growth. Now there is one more challenge that I personally believe is going to happen. In fact, why? Because see, there is a reason for central bank to reduce the rate of interest if the economy is slowing down. There are little signs that US economy is slowing down. There is no confirmed trend that suggests that, because if the Fed, one of the conditions is that there should be equilibrium between the demand and supply of the labor market. And even there, we believe that there is still equilibrium has not been reached. More demand, less supply. So, and some of the experts, in the beginning of 2024, market was expecting 7 rate cuts. Fed in the SEP, Summary of Economic Projection, they said 3 rate cuts. And as we move, as the year progresses, now the expectation anywhere between 0 to 3 rate cuts. 0 means no rate cut at all from the Fed, purely because of why should they cut the rate if the economy is doing so great? Okay. Otherwise, if you further cut the rate when the economy is doing well, it can create a hit in the economy. And there is a disequilibrium between the demand and supply in the labor market. So if you look at the S&P 500 companies' earning growth in this calendar year is expected to be 11%. Last year was only 2%, 2023. Okay. And for the next, that is 2025, is expected to be 13%. That's going to further increase from 11%. China has made China have every year their meeting of their leaders aiming at 5% GDP growth. And today the data from China really came out well. They are looking at 12 million urban jobs, 5.5% unemployment rate, and inflation of 3%. How much they are able to achieve and so on and so forth, I think still too early to basically make any reasonable comment on that, because many times we have seen that China does give a hope, and due to this real estate crisis, that hope doesn't materialize. We need to wait and watch. But today what data came is quite positive. ECB has indicated that they can look at the rate cut by June 2024. Even if you look at the US, there is an expectation that on 12th June FOMC meeting, there could be the first rate cut that everyone is expecting. Let's wait and watch. Bitcoins, gold, crude, all are moving up. Bitcoins and gold touch all-time high. Crude is up by almost 20 to 23%, purely because of demand. So if you look at the International Energy Agency, they have stated that demand for oil is going to go up purely because of the strong growth in the economy, world economy, and plus supply cut. So OPEC Plus is extending the cut of the supply cut into Q2 of this calendar year. 2.2 million barrels mainly will come from Saudi and as well as from the Russia. So on one hand, demand is likely to go up, supply is going to reduce, and that could keep pushing the crude oil prices higher. Now the danger with the crude oil prices going high is that it could also stoke inflation in the world economy. So I think it's a little what we call situation, that delicate situation. All central banks will watch very, very closely. Before I move on to this, let's try to summarize what happened in FY 2024. Am I right? So if you look at this slide, which I made a presentation to our PMS customers last Thursday, but I thought let me do it with our regular customers also. So if you look at this 29% growth that came in Nifty 50, it was completely non-linear. Why am I saying so? Because nothing happened in July-September quarter, nothing happened in Jan-March quarter. The growth came mainly from first quarter and the third quarter, that is April to June and this one. If you look at the small cap, it gave 60% return for the full year, but no return in the last quarter. In other words, the first three quarters were so good, it did not. And that's where I wanted to harp on this one, that returns in the equity market would always be non-linear. Don't get carried away by 1 month or 3 months or 6 month returns. It does not portray what kind of returns it will have. As I told you, the beginning was very poor in beginning of FY 2024, but closed very, very strongly, 29% in large cap, mid cap and small cap in excess of 60%. So that's the kind of stuff. And for a change, mid cap did better as compared to small cap. Why? Because mid cap index moved up by 63% versus small cap of 60%. If you look at the India's market cap, we added near about 126 lakh crore market cap in one financial year. If you go back to April 2020, the total market cap was 129 lakh crore. Total market cap was 129 lakh crore. We added 126 lakh crore only in 1 year. तो जब से हिंदुस्तान में स्टॉक मार्केट चालू था तब से, of course, April 2020 is a little long period to compare also. I'll be very honest with you. Why? Because we had COVID. The market had taken a huge beating in the month of March. And then the point I wish to convey is that it took so many years, and we were 129 lakh crore in April 2000 total market cap. And it took 1 year to add that much market cap. Am I right? 84 lakh crore has been added. And if you look at 126 lakh crore have been added only in last 12 months. Now let's look at the other way around. India's total market cap was 258 lakh crore as of March 2023. In other words, we added 50% more. Can you imagine the what I'm trying to say is that कि उसको हिंदुस्तान की हिस्ट्री तो बाप रे बेस है तो बहुत सालों से, am I right? उससे तब तक 258 लाख करोड़ का मार्केट कैप था और उसका 50% सिर्फ एक ही फाइनेंशियल ईयर में मार्केट ने दे दिया. And what happened to the market cap? Something can happen to your portfolio also. So that's why I keep saying market nature is non-linear. सालों साल कुछ नहीं होगा और बहुत कुछ हो जाएगा 1-2 सालों में. Which company did well in Nifty 50? Tata Motors, Bajaj Auto. So if you look at this Hero MotoCorp, I think clear cut there was a one theme that clearly played out very well is auto, energy, and then the end of this PSU. Whether it was Coal India, whether it was NTPC, whether it's a ONGC, whether it's a BPCL, they did well. Am I right? And of course UPL, Hindustan Unilever, HDFC Bank. So in bad market also you cannot make money. In good market also you cannot make money. The classical example, if you have invested in these 3 companies. Why? Because UPL lost 36%, is no longer a Nifty 50 stocks now. Hindustan Unilever 12% down and HDFC Bank down by 10%. So market did well. That's why I keep saying that your view on the market doesn't matter. Your view on the company matters a lot actually. Am I right? And that's what HDFC Bank has been a complete laggard for many, many years now. So minus 10%, Hindustan Unilever 12%. I'm not saying that's going forward also going to happen, but that's what has happened. If you look at the indices, I think realty index is on the top of the chart, 132%. PSU is another flavor of the season, did extremely well. So is the case with PSU Bank. Auto, I think, has really bounced back very, very strongly. Healthcare did very well, up by 58%. But this was the year definitely for mid and small cap. Look at the growth. Okay, the gain versus 2x of the large cap. 2x, and that's a very, very big gain that we saw. And of course the banks and NBFCs continue to underperform significantly in FY 2024. If you look at the historic returns, and I just wanted to touch upon this, so there is a pattern which I've always seen. And what is the pattern I have seen in last couple of times? 3 years in a row, the Nifty will go, Sensex will close in green, and then next year it will be red. 3 years in a row, green, and then the red. Now this is the 4th time in a row. This was a marginal gain, okay? This is the 4th year in a row the Sensex has closed in a green. Something similar happened from 2008 to 2008, while 5 years in a row the Sensex closed in the green. So will FY 2025 would be the something very similar? we need to wait and watch. Doesn't look like at this point of time, for the very simple reason, do not expect 25% return. If you look at the average return that market, if you look at this, the spike of 83 and so on and so forth, normally comes when the market has done very badly in the previous year. For example, 28% decline, 12% decline. There is 12% 3 years in a row, and then we saw 5 years in a row positive. 38% decline, the next year 81%, 11% kuch zyada nahi, but minus 9, 17, minus 24, 68. So what does this mean? Whenever there is a double-digit negative, what we call negative, the next financial year, the market gives substantial positive returns. If there is no negative returns in the previous, then don't expect more than 20% return. That's what the trend suggests, especially if the 3 years are over. And that's clearly senses that will market give 25% kind of return in FY 2025? Probability is very, very low. I'm saying probability. There is nothing short in this world, especially in the stock market. Am I right? The probability is very low that we could expect. Even double-digit returns looks a little difficult if I look at this chart. I may go wrong, I can prove wrong, but right now the data suggests that don't expect too much. Why? Because the valuations, the historical trend does not favor this kind of a strong this one. FIIs normally, and there's another reason. If you look at it, whenever the FII puts in big money, the next financial year, there is an outflow. Like 274 lakh crore in FY 2021, it is met with 140 lakh crore, 1.4 lakh crore in next financial year. Second highest FI investment in FY 2024, 2.08 lakh crore that FI pumped in Indian market. Probability is very high that we should expect very muted kind of an inflow in FY 2025. If you go back to my January presentation also, I did mention that we should not expect too much inflow from the FPI. Of course, FPI impact on the market is declining, but nonetheless, don't expect too much inflow, this one. And where have the FII have been putting money? Purely their financial sector is their top boss. So if you look at the total holding as of this one is 18.3 lakh crore, 6.4 is followed by IT, oil and gas, mainly in Reliance, auto and auto components. See, auto and auto components, they've substantially increased this one, 74%. And FMCG, in fact, they've declined. In fact, even though it's for the full year, there's 24%. In the last quarter, 4.2 has come down to 4.1 lakh crore exposure. Total 5 sector, this accounts for total 62% of the total holding FIIs have in India. Am I right? And that's what has happened. So these are the 5 sectors. So if you really want to understand where FI puts in money, just look at these 5 sectors, and that will give an idea whether FIs are going to be positive or negative in Indian market. In FY 2024, Nasdaq did better than the Indian market. Am I right? And if you look at the S&P 500 and Nifty, there is hardly any difference between two. Even if you look at the Dow Jones and the Sensex and Nifty, Indian market did well. So I think Nasdaq did better in compared to other indices as compared to this one. But overall, I think it was a year for equity across the world. Most of the equity indices closed in the green in FY 2024. Now let's come to the March highlights. I'll very quickly run through that so that there's enough time for us to do question and answer. So after many months, the last time we saw market cap, the advanced decline ratio less than 1 was in the month of March. And again, it went below 1 is in the month of March. So एक साल के बाद advance decline, that means more complete decline as compared to advance in the month of March. Market cap almost at the same level what it was there last month, 384. Of course, in between it did move up, but 384 lakh crore. Am I right? Average cash turnover came down 3 years in a row, 3 months in a row, more than 1 lakh crore, and then it declined to 97. It's very close to 1 lakh crore. But there were number of, but this is average cash turnover. So anyway, it doesn't make much of a difference. If I was talking about for the full year, the full month, then my argument would have been right, 97. But somehow the retail investors' participation has gone up substantially. And that's the reason why we see a substantial jump in a cash turnover in the market. This is cash turnover, not F&O turnover. In other words, people are active even in the cash market in the retail investors. How did the indices perform? No, Nifty Auto is one of the best performing, followed by metal, purely because of copper is at all maybe 52-week high. It's going up very well. The large cap was up by near about 1.6%, but then if you look at the mid cap was down, small cap was down. Okay, and media and IT, as I was talking about, is among the worst performing. But overall, it was not a great month for the investors. Why? Because advance decline ratio was less than 1. Nifty 50 again, Bajaj did well, Maruti Suzuki did well. If you look at the Hero MotoCorp did well, Eicher Motors did well. Today Eicher is down, but it did well. Tata Steel did well, Hindalco did well. Again, that's a metal pack that did well. And some of the companies from the FMCG, some of the companies from the NBFCs, and some of the companies from the technology, they did not do well. Like for example, Infosys was down, Wipro was down, HCL was down, LTI Mindtree was down, TCS was down, and some of the companies like FMCG, like Tata Consumer was down, Hindustan Unilever was down. These are companies that did not do well. FPI, again, they become net positive, 35,000 crore, that's good, and so is the case with DII, they pumped in about 56,000. So almost a 1 lakh crore has been invested between FI and DII in the month of March. I again repeat, almost 1 lakh crore has been invested. And if you look at the data, you don't see this kind of a inflow, of such a high magnitude. So normally what has happened, I've always seen, whenever the FI is a substantial investor, DI would be a seller. Am I right? And vice versa. For example, in the month of May, 43,000 crore best negative, 47,000 marginally. So दोनों मिला के 50,000 crore हुआ. Again 46,000 crore negative. But this is the first time where March में FI also put in money and DI also put in money, and that's basically close to 1 lakh crore. But that 1 lakh crore does not reflect in this data, market cap. Am I right? In fact, it's a marginal decline as compared to this one. So in other words, possibility is very high. The retail investors sold and gave shares to the institutional investors. What should we expect? So I'm not going into election now because anyway, election तो होने वाला है, उसका तो result अपने को 6 June को पता चलेगा. But I think market will definitely look at IMD ka prediction about the southwest monsoon, and that is going to come by mid-April. Now, why it's very important? We all know what's happening in Bangalore. If you look at the water reservoir level, and there is a prediction which has come from the IMD that there is strong heat waves are going to be there. That's further going to dry up the water. And I think if for some reason, if the southwest monsoon prediction is not good, market is not going to take it lightly. So I think it's a very, very critical that we need to wait and watch. And this is one event that will be very, very, market will watch very closely. Very, very closely. Because of water reservoir level, food grade, it can impact industries, and so on and so forth. RBI is going to meet, so the meeting would be there, but they are going to come with the announcement on the 5th April. That's a Friday, am I right? 2nd, 3rd, 4th, 5th. So Tuesday, Thursday, Wednesday, Thursday, Friday ko. And so while the general consensus is there is no need for rate cut. As we have been saying for petrol and diesel, we believe that there will be a 25 bips rate cut. More just to what we call ease the burden on the consumer, and it will also have a feel good factor for the population. India will have a above normal temperature. So my request to all of you, please be careful when you step out. Please wear proper protection when you step out of your house, purely, especially when during afternoon or early evening. Otherwise, you could have run into a problem. and that's going to be there. Please make sure that you are hydrated properly so that you don't run into problem of dehydration. Keep yourself, if possible, don't step out only during this one, because it's going to be very, very this now. Now, what could happen because of this? Do expect that companies, those are into air coolers, fans, air conditioners, and refrigerators to do very well. Their demand would be, and if they, so my request to all of you is that when these companies from this, they announce the numbers, they are going to give a commentary. Please listen to that commentary, which will really give an idea what kind of built-up inventory has been built up with the retailers. And my sense is that I think they're going to come out with a very strong commentary, where they would be seeing a good demand for this, because heat wave is going to be there. It does call for higher sales for product like this. Election is on, so season is on. There'll be allegations and counter allegations that can market little volatile, but temporarily. Don't read too much into allegation and counter allegation, because these are all scene that happens every election time, and then things subside. So don't give too much importance. Over the years, we have observed that market don't basically have a very major impact on a longer time. But market is going to remain volatile. I know market did extremely well on Wednesday. We know market did extremely well on Thursday. We know market did extremely well on Monday. But despite that, it's going to remain volatile purely because of rich valuations. And that means that don't get carried away by this rally in the market. Be careful in terms of what company you get into, what sector you get into. I do not want you to lose your major portion of your capital. With this disclaimer, let's open the floor for question. There's one clarification I want to tell you, because I met someone yesterday, and that gentleman was under the impression that, this question and answer is only for the few members, in the sense only the paid members. And I must clarify, you please ask. I don't know whether you are paid member or not. Even Amir wouldn't know whether you are paid members or not. This webinar is open for all investors. So whether you are a paid member, not a paid member, please feel free to ask questions, and we'll be more than happy to answer. So I thought, let me just clarify that. This webinar is open for all members, so it's not only for the paid members. So non-paid members can also ask questions. Only thing we will not answer is a company-specific query. But if you have any doubts, if you want any views on macro, we'll be more than happy to respond to that. Please, Amir, over to you. Sunilji, greetings. In the newly introduced SS strategy, can we buy highly rated mid and small cap stocks? Kindly clarify. So Venkateswara sir, so for the benefit of everyone, what is SSS strategy? SSS strategy we introduced in our PMS, that is called systematic staggered strategy, where instead of buying at one go, we are going to stagger this over a period of 120 days. And in this, right now, we are going to buy only large and mid cap. We are not going to buy small cap in this SSS strategy. As and when our views on small cap changes, we will buy small cap. But right now in SSS strategy, we are not buying small cap. The funds will go into large, predominantly in large, followed by the mid cap. David, when will be the performance fees be deducted? Sir, it gets deducted once you complete your quarter, and the performance fees will be levied only if your amount, the present value of the portfolio is higher than the previous portfolio amount where we have charged the fees. For example, if we never charge you, then your investment amount. But that happens one quarter. So depending on which date. So for example, you came on 1st January, then it will get deducted on 1st April, and so on and so forth. So accordingly, that will work. Amit Sunil, thanks for the most wonderful insight. Just today I read the US is heading up to $1 trillion USD debt every 100 days itself which is going to ensure the most deadly recession ever. Kindly let us know your opinion on the same, the impact it can have on Indian equity market. So I think I agree with you that US is a problem in terms of the debt that is piling up, and how are they going to repay, how are they going to, because one thing is that US can is a reserve currency for the world, and they don't run into a problem of this one, but it's going to be a problem someday. Whether it's going to be a problem in next 12 months or 12 years, I don't know, but there will be a problem. So but is it an immediate concern for us? The answer is no. Is it immediate concern for the US economy also? Answer is no. Okay. And will there have an impact on Indian equity market? So my sense is that the more damage it happens in the other parts of the world, India would be the beneficiary of that. Why? Because the more funds will come to Indian equity market, because every fund manager has a job to create alpha on their portfolio, and they will look at those countries where it can generate more returns for the investors. If you remember, FY 2024 was completely sell China, buy India theme with the FIIs. Am I right? Something tomorrow, that same thing can happen. If suppose something is to really go terribly wrong with the US, they will say, okay, sell US, buy India. So temporarily there could be an impact. I'm not saying, but eventually India would be the biggest beneficiary of that, because ultimately more funds will come, and more funds come. See, if you look at this complete, the total market cap, more than 50% is accounted by the US economy, the US market, which I believe is unfair share. In fact, it should be more. Why should one country should command more than 50% market share in terms of market cap? There is no logical reasoning for that. Am I right? So eventually that adjustment has to happen, and that once that adjustment happen, country like India will. So on one hand, India will move from middle class to the upper middle class to the rich by 2047. We do have a dream to become a Viksit Bharat, and if we are going to be the Viksit Bharat, then you know what can happen to the money that which is lying in US will come, or those who want to put it today. Not only US fund managers are putting money in US. There are so many other parts of the world, they are also putting their money in the US market. I met someone the other day who is from the Saudi. He is managing one family office in Saudi, and he was saying we invest in the US market. Now, the moment they see that US is basically going little weak or something, they don't see an opportunity, they will search for other markets, and India could fit that bill purely because of the strong economic growth, reforms, and strong leadership. So I believe, on the contrary, if something has to really go terribly wrong with the US, I think eventually India would be the biggest beneficiary in terms of the funds. Vikram Singh is saying, how to interpret this rally? Sir, ज़्यादा सोचने का नहीं डे टू डे मार्केट का. Even I don't look at. In fact, I did one. I tweeted and it's on my LinkedIn also. So a lot of people were writing in obituary or things about Daniel, who wrote a book called Thinking Fast and Slow, and he said in his book that how many times retail investors should watch their portfolio. And his answer was once in a quarter. कितना 3 महीने में एक बार देखने का portfolio को. And his reasoning was very simple. He said, loss of 100 rupees in the portfolio is more painful than the gain of rupees 100 in the portfolio. In other words, he said, was क्यों दुखी होने का? Because someday portfolio. So he said basically, look at once a quarter. अभी क्या होता है हम लोग का, as someone confessed to me other day in one of the webinars, is that he keeps looking at the portfolio value even on Saturday and Sunday. Market तो बंद होता है तो कुछ portfolio value तो बढ़ने के घटने नहीं वाला है, but still people look at it. So the point is that yes, don't get too much excited about this recently. We do believe, see, ultimately market is a function of fundamentals. And market can't ignore fundamentals for long. So valuations are rich, whether we like it or not. Am I right? And hence, one has to be a little extra careful. And more the market goes up further from this level, more the risky it becomes. And that's one of the reasons we have moved to the large caps in this. If you look at today, while the overall market did well, despite we have too much exposure, in fact 90% large cap, we outperformed the benchmark. Okay, so we will keep doing that. But my suggestion is that don't get too much excited into this last 3 days trading days. Really, I don't think the upside seems to be definitely capped at this point of time. Ashish, should we increase the allocation of small and mid-cap since the market has come back to the same level it was before the fall? No, Ashish, sir. I again maintain that there is a froth in the mid and small cap. Don't get too much excited about this one. They are likely to underperform the broader market. So no, it's not a time. Shiva, good evening. What about the impact of T07? Will this impact options trader only for the long-term investors? So I think T+0 is a very good move, and I must congratulate SEBI for this. Why? Because this T+0 is going to bring in a lot of efficiency in this country. You sell today, आपको पैसा खाते में आ गया शाम को. अगर आपने आपने लिया, आपको डीमेट में आ गया शेयर्स शाम को, आपने बेचा, आपके खाते में पैसा शाम को आ गया. आई थिंक इट्स गोइंग टू क्रिएट, आई डोंट नो हाउ मेनी पीपल रिमेंबर, बट वी यूज्ड टू हैव T+15 cycle in India. Then it become T+10, T+5, T+3, T+2, T+1, and as and when the number of the T plus something got reduced, market become more and more efficient. It attracted a lot of investors to the stock market. So I think T+0 is a very good move, and it's going to benefit the long-term investor. I don't know about the option trading because I don't do that, but I think it's a very good move for the long-term investors. In fact, if you ask me, I'm the most happiest for this. Of course, it's only limited to the few sets of companies, but it's a need of an hour. See, today everything is digital. तुम्हारा डीमेट में है शेयर्स, वो तुमने लिया है, तो आपको अरे आपने बेचा है तो अपने डीमेट अकाउंट से निकाल देगा डिजिटल. सी टुडे यू डू NEFT ऑन अ रियल टाइम बेसिस, एम आई राइट? आप किसी को पैसा ट्रांसफर कर तो रियल टाइम में होता है कि नहीं होता है? इफ दैट हैपेंस इन रियल टाइम, व्हाई शुड नॉट द स्टॉक मार्केट? डीमेट इज इन डिजिटल, योर बैंकिंग ट्रांसफर इन डिजिटल, तो व्हाट इज द प्रॉब्लम? अगर आपने बेचा है, आपके पास आपने कुछ लिया है, इट शुड ब्लॉक योर अमाउंट इमीडिएटली, लाइक एन एसबा. इमीडिएटली पैसा ब्लॉक कर लो. अगर आ गया कंपनी जो आपको लेना है, डेबिट कर लो. जिसने बेचा उसको क्रेडिट कर दो. सी दिस इज अ वेरी एफिशिएंट, एंड आई एम वेरी हैप्पी. दिस SEBI is going in the right direction. Can we have a PMS account for minor? I'm afraid, sir, it is not allowed as per the SEBI guidelines. The person to whom we are going to sign, it's a formal agreement we need to sign, sir. So it's not possible to have a Shiva sir account for the minor. I would like to build and hand over wonderful corpus amount to my next generation. Sir, you can definitely do. What I would request you, please put that corpus in the PMS, make nominee to whom you wish to give away that assets to, and then the job is done. And when that person becomes a minor, becomes a major, then you can again open an account for that person, and we can start managing that. So that's how it is going to work. But T+0 is a game changer. People don't realize this. The way India moved from physical sales to demat, the amount of impact. Today, I'll tell you today also, have some physical sales. You know what is a silly thing that registrar is giving me answer? On the sales certificate, physical, it says Sunil D. Damania. In my pen, it says Sunil Dalpatram Damania. This is a mismatch. On my checkbook, it says Sunil Damania. It says match, it doesn't tally. Now, this is the kind of silly things people don't apply the common sense. I have given my CML, that is client master list, which has my PAN number, which tallies with my PAN number. I have given my cancel check. I have given my Aadhaar card. I have given my PAN card. I'm struggling to this kind of a problem with physical shares. So I'm so happy that demand happened, which basically removes all your hassles. So T plus 0 is a completely, in fact, more money will come to the equity market purely because of T plus 0. See, there is no other assets class which is as liquid as Indian equity market. So why should you not get your money if you want to want money? Why should you even wait for one day to get your payment? It should happen in fact, मैं तो बोलता हूँ real time होना चाहिए. Why T plus 0 also? It should happen in real time. पैसा block कैसी? Reason why it's not possible, I must tell you that also. Like not all brokers have an online trading product. They don't have an access to the bank accounts of the customer. Like if you go to like if you trade with HDFC or someone, they also have an access to your. They immediately block that amount. In other cases, there are many brokers who still. A small broker don't have that kind of an what we call this one. So but eventually it should be in a real time. If you ask me, within half an hour, if you sold sales, आपके खाते में आ जाना चाहिए. Provided you said it's for a delivery, it's not for intraday. It should get hit into this one. And if you आपने बेचा है, तो आपको पैसा मिल जाना है और आपने लिया है तो आपके खाते में पैसा डेबिट होना चाहिए. I think this is the best way you can create. Today, real estate is very illiquid. Gold, there is a high transaction cost. Even real estate is very high transaction cost, am I right? But this is the market which has a low transaction cost and it's very liquid. So I think more money will flow from physical assets to the financial assets. Vishal is saying why not start PMS advisory service as we had previously, because we haven't 60 lakhs, there are no stable restrictions on advisory for you. No, you are right, Vishal sir. There are no limits for the advisory service. So if you remember in our Infinity Advisory, we were doing for 10 lakhs also and 20 lakhs also. The reason we had to discontinue, we did not charge fees also, I must tell you that also. We took a huge loss in crores. The reason is very simple. We did that because our IP is the same, sir. PMS. And if you have the advisory also, there will be a clash of this one. So that's the reason we have one IP. Either we use it for PMS or we use it for the advisory. We can't use it for the both. And hence we chose, let's go ahead with the PMS, sir. Don't worry, sir. Today you don't have 50 lakhs to invest in PMS. You will make money. And as and when you make money and have 50 lakhs, we'll be more than happy to onboard you in our PMS service. Despite 8.5% growth, good GDP, you mean to GST collection, controlled inflation, why consumer sector performance subdued instead of booming? Any specific reason? Please enlighten. I think what is happening is that on the consumer side seems to be that there is a lot of competition coming from the, if you remember, I did one future trend analysis and I've taken one slide from the Hindustan Unilever presentation which they made for the result, post-result, this one. And they did mention that the organized players are getting at the cost of the unorganized player. Now, within organized sector, it's very difficult to capture the demand trend and the consumption cycle, because Nielsen and other people, they may not be able to capture the same efficiency they can create for the organized, for the unorganized player. And that's the reason why. Second thing, what is also happening is that the people are spending more money on the services than the consumption. You look at your hotel, previously I used to go in any of the 5-star hotel, I used to end up paying 6,000-7,000 rupees per night. Today I am paying almost 12,000 to 15,000 rupees per night. You look at your freight cost, the airline ka cost dekh lijiye. You look at other, so services actually has gone up substantially. Today you go to for a movie in a Phoenix Palladium and you go for that recliner, would cost you about 1,000 rupees per seat. Am I right? So I think people have money, but money is going more towards the services as compared to the consumption. It's not that people stop consuming. The growth is not happening as much as what is happening because service basically seems to be taken away the larger part. If you look at your own monthly budgets also, sir, you would realize that you somehow what you used to spend before COVID on the services, you seems to be spending much higher on that now. So it's not that you stop consuming it, but the share of wallet of consumption seems to be coming down at the cost of services. So I think that's one of the reasons service sector is doing extremely well because of this. Why? Because more and more services are being consumed because of the robust in the economy. Rahul Tyagi, I have a question related to PMS. I have an NRI status and would like to be part of your journey in PMS with initial amount of 50 lakhs. Please advise, should I make an investment through an NRI account or should I through my wife's account because she is holding Indian resident status? Which option is better to save various charges like transaction, demat, taxes, etc. compliance for the long run? Sir, Tyagi sir, your demat charges, transaction charges, only thing in NRI, the TDS get deducted by this one. So there will be some this one. Otherwise, brokerage is the same, demat charge is the same, everything is said for the NRI and RI. The question that sir, you need to ask yourself, where does the money lies, Tyagi sir? Is it with you or with your wife? Okay, and I would request you please consult your chartered accountant. For us, whether you are an NRI customers, whether RI customers is one and same. In NRI, there are more compliance as compared to RI. I must tell you that also. And if you happen to be from North America or Canada, the compliance are much more higher. Am I right? If you are asking very simplistic manner, Western India is much better as compared to the NRI. But having said that, we have many NRI clients and they are doing extremely well in terms of onboarding on this one. So we had initial problem in terms of onboarding them, but now the operations become little smooth for them to onboard. So for us, it doesn't make sense. This doesn't make much change for us. But if you ask my personal, I would still, RI is much better option as compared to NRI. Sudeep Avram, Mohit, and you repeatedly tell in many webinars that around 1 year back that you both expect NRI to appreciate, but it did not happen yet. What is your call on NRI now? Do you expect NRI to appreciate? And if reasons, put a detailed webinar on this possible. So you are right, sir. If you look at my equity outlook 2024 also, I do mention that rupee should appreciate against the dollar. Now you are right, it has not appreciated, but at the same time, it did not depreciate also as much as other currencies have done. So, but the reason is very simple. I see India will get lot of FPI flow. India will get lot of FDI flow, which I was mentioning about that European, this one, $100 billion US in next 15 years. So India will be, being the fastest. So, if India can reduces its importance on the imported fossil fuel, and why? Because of blending of ethanol, moving to more sustainable energy and so on and so forth. So if India is going to spend less on the imports and more on the exports and more inflow comes in, I think it's going to create less pressure, less demand for the dollar, in turn appreciation of the rupee against the dollar. So our in-house view is that logically India rupee should appreciate. It has not happened. I agree with you. But sometimes, sometimes the things do happen with the lag also. And that can happen. But logically, if you ask me, rupee should be near about 80 against the dollar. Whether it happens in FY 2025 or it happens in FY 2026, but logically it should happen. Oh God, R. Padma, very long question. It's a long question with you in market, Mojo. You taught me market discipline, confidence in market to stay fully invested. This has given fantastic returns. I'm so happy. These days I have been a blind follower vis-a-vis model portfolio and I'm seeing great alpha. Thanks a million. Thanks a lot to you, sir, because ma'am, the reason is very simple, because I have decided to follow a discipline. these days you are not showing how model portfolio wallahs are doing as a whole in Market Mojo community. I'm not seeing any chart on that. I'm imagining very positive story. These days your suggestion on profit booking in model portfolio is amazing. Hope I'll be able to graduate to PMS in near future. Thanks again, R. Padma. So thanks a lot. Very nice comment. Happy to know that you are, and I'm happy. See, it's not that there are thousands of investors who attend this webinar. I must say, with lot of data, backed by data, not all are able to make that kind of a money. Why? Because they are not disciplined. Fear, they think that they understand much better than, they are smarter than the market and so on and so forth. I'm happy that you are so disciplined in terms of following that. Now, coming back to your question, why we are not showing model portfolio performance. The new IA guidelines have come out from the SEBI, which suggests that you are not supposed to showcase the performance because we don't know whether investors followed or not followed. Second thing, every day someone will come and create model portfolio on a website. Now, which data do we need to show? Then someone would do some additional investment in that portfolio and so on and so forth. So due to the regulatory point of view, we have stopped showing because of change in the guidelines, IA guidelines that call it investment advisory guidelines. That's why we have stopped it. But since if we are doing well, see, our IP remains the same. It doesn't differentiate between person A and person B. If you are doing well, that means everyone else is doing well. If you are not doing well, you can assume the rest are also not doing well because the IP is the same. The basket remains the same. And I've said that over a period of 3 years, all model portfolio returns should mimic. Something similar we are seeing in PMS also. Why? Because it's the same set of basket which is available for investors to invest in. Case Brad, request clarify, when you say 5 to 13 connection with the market forecast for next 5, does it mean that percentage increase in market in next 5 years will be equal to that of the percent increase in last 30 years, or we are talking absolute numbers over last 30 years? Such absolute number I'm talking about. So when said, suppose if you made in last 30 years 1 crore rupee, I'm just giving an example. Then I'm saying in next 5 years you will make 1 crore rupee. If you have made 100 crore rupees in last 30 years, then in next 5 years you will make 100 crore. That's what I'm saying, Brad sir. Okay, so I think Amir is saying this is and that was the last question from Brad sir. So thanks a lot everyone. I think we also overshot the time limit. I don't want your family members cursing me because that must be holding them back from dinner or maybe evening walk and so on and so forth. So my apology, I overshot near about 8 minutes today. But it was purely because of interesting questions coming in, and I did not want to disappoint a lot of you. Thanks a lot, everyone, taking time out. I'll be in front of you on Friday with the Future Trend series. In the interim, I think Karan is going live tomorrow. Am I right, Amir? Yeah. So Karan is there tomorrow with the new Mojo stock that entered. And I think Thursday I'll be in front of our PMS customers with our monthly performance. And Friday, with everyone with the future trend. And it's very interesting. I would request you to look at some of the trend that we are going to talk about in our future trend on Friday, which says which is the best month for the equity market. Okay. What has been the trend? Like someone asked me about that 100 billion, the additional, this one. So where does the India's fiscal deficit stand vis-a-vis some of the other developed countries and so on and so forth? It's a very interesting trend analysis that we're going to do on Friday. Please come, do join, and it'll be a very interesting, knowledgeable subject that we are going to cover on next Friday. With this, thanks a lot. Take time. Good night. Take care.